Hey guys, Sabina the lender here. Thanks for tuning in. 2024 is going to be a challenging year to buy a home in this market, but it doesn't have to be. Now, I get it. The housing market is presenting some unique challenges. Home prices have soared, interest rates are still holding strong, and so many people are finding homeownership barely within reach. And I know it seems silly, but the key here is to just try to get in while you can before you're priced out entirely. Buying a house doesn't need to be this super daunting task that's impossible to achieve. So just put a plan in place and commit to it. Let's address the elephant in the room: home appreciation. It's not some big secret. Homes are expensive, for sure. Most people are concerned about affordability, especially when interest rates are higher than they've been in over 20 years. And they've actually dropped from their 20-year highs from just a few months ago in October, so that's good news. The Fed has already announced that they do foresee rate cuts in 2024. Now, the Fed is predicting 3 rate cuts, but the markets are predicting a few more. We really just need to see how the next few months of economic reports and data shake out before we have a better idea of when the rate cuts will actually begin and how many we'll see this year. But so far, the consensus is that we will see lower rates in 2024, even lower rates in 2025, and again in 2026. So that's great news for affordability, right? Well, not so fast, because every 1% improvement in interest rates will mean that 5 million more people can qualify for a home. Now, that's not to say that all 5 million people are going to want to buy, or that you'll be competing with 5 million people to purchase your home, but you'll definitely have more competition than you have right now. You can expect the whole multiple offers over listing price to come back. Some areas are still seeing multiple offers over ask, especially if it's part of the pricing strategy that the realtor and the seller are using to attract more potential buyers. But that's why I'm telling you this now, so you can make a more informed decision if this is the year that you want to buy a house. I'll tell you that a $500,000 loan today at 7% has a much lower payment than a $560,000 loan at 6% would have. And who knows if you'll need to tack on mortgage insurance premiums to your mortgage payment if home appreciation outpaces your down payment savings and the percentage of your down payment ends up lower. It's super hard to outsave home appreciation. Your savings rate will never be that high. So the key to winning in this market is to pay less over time and buying as soon as you can afford to do so. That's the key here. And that's why I always tell people to talk to a lender before you start looking at homes, so that you can put your plan and strategy in place now, so that you also understand the numbers, and so that you're not closing credit cards that you don't use, because believe it or not, that kind of thing does have an impact on your credit scores. Talking to a lender before you make seemingly good financial decisions will help you make the most informed buying decisions in the long run. A big decision that has a huge impact on qualifying is changing jobs. So make sure you talk to a lender way ahead of time before you change jobs to make sure it doesn't impact the timing of your new home purchase. And this is especially important if your income is made up of extra income sources like bonuses, commission, overtime income, or maybe you don't work a standard 40 hours a week. Always, always, always talk to a lender as early in the process as possible so that you're well informed. I cannot tell you how many times the information I see on Reddit or Google is absolutely wrong, and it will set you back. Another major challenge in buying a home this year is the fact that the Fed's soft landing might not be as soft as they're predicting. We've already started to see some major layoffs in the tech and banking sectors. Before you buy your house and secure a 30-year debt that you're obligated to pay on time each month, please just make sure that your job is secure. And try to have at least 6 months of reserves at a bare minimum. It's not required to qualify in a lot of cases, but it's a good safety net to have. Once you know that your job's secure and that you have your safety net established, then make sure you and your lender discuss strategies and optimizing your strategy so that this market's unique challenges are easy for you to overcome. One way to stand out big time in this market is to have your pre-approval signed off on by an underwriter ahead of time during the pre-approval stage. So if your lender doesn't offer this, then find one who does, because the seller is going to want the best offer And the best offer means someone who will close without the deal falling out because the buyer couldn't secure financing after all. A solid pre-approval letter is absolutely necessary if you're securing a mortgage to buy a home, and I'm not talking about some online lender that you've never even exchanged words or documents with. At the very least, make sure you and your lender exchange words. Better yet, make sure your lender is the type to have a loan consultation with you over Zoom or over the phone at the bare minimum. The lender should understand your finances and your long-term goals. Otherwise, they're not capable of preparing the right financing options for you. Believe it or not, I'm still seeing buyers getting their negotiations accepted in some markets. Ask your lender questions about seller buydowns, the difference between a temporary buydown versus a permanent buydown, and when one makes sense over the other. Will interest rates dropping mean that negotiations are off the table? Maybe, but not necessarily. So maybe you do end up being the highest offer, even if you're asking for a seller credit so that you can buy down your interest rate, or just bring less money to the closing table so that you have more reserves for the safety net we talked about earlier. The seller usually only cares about the bottom line figure, which just means more money in their pocket after the sale. Happy house hunting! If this video gave you some insights on what challenges you may run into buying a house in 2024, then don't forget to hit the subscribe button to tune into more helpful tips and tricks to win.